Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take another look here at Bitcoin, see what's going on, of course, help understand the best practice, big picture, and really just kind of see what's going on here with this little push, this most recent increase in value from Bitcoin. Because we can see here that Bitcoin is up about 16, almost 17% from bottom to top in the last 72 hours, okay? So again, pretty awesome stuff, but we want to kind of see how much further that could go and essentially what things are going to look like as well in the big picture, okay? So we're going to look at a handful of different things here today. If you're new to the channel, not a financial advisor, I really do love teaching people to trade. So I hope you can learn something here today and just know I'm passionate about trading and surviving bear markets. So if that is something that's of interest to you, feel free to check out my Trading Academy community and Signal group. I basically just share all the trades that I take with my community, as well as, of course, more important, provide you with a Trading Academy so you can learn how to trade more more consistent. Because to me, honestly, patience is a big factor a lot of folks do not have, and it takes a while to develop. But generally speaking, if you can work on that, while you're in a bearish market, then the bull market will be even better. Okay, so again, now is the best time to really kind of learn how to be a better trader. So definitely check that out in your own time. What we're going to do here, of course, is take a look at a handful of things. So before we jump into the charts, let's go ahead and just quickly review here. Dollar index is kind of breaking even here today and slightly on the green side, okay? That does imply that Bitcoin has a little bit of making up to do to the downside, all right? So again, once dollar index happens and it goes a certain direction, Bitcoin will have a tendency to go in the opposite direction shortly after. All right, so I would expect and anticipate the price action to continue to progress, perhaps even lower, at least more so to retest 23,000. Now, taking a look, of course, as a traditional market, we can see S&P and NASDAQ are up 1% to 2%. So we got some pretty decent benefits there as well in that regard, whereas a lot of the traditional markets are back up over the 50-day set moving average. Again, very helpful in that sense. Bitcoin is also exuding that similar behavior. Okay, so we're going to go ahead and look at Bitcoin, of course, obviously a lot more in detail, but that is something that kind of leads into it as well. We can see with Bitcoin dominance increasing, obviously the price of Bitcoin has gone up, and most alts are not necessarily increasing. In fact, a lot are coming down, which seems strange, right? But no, it's very common because money is coming away from altcoins and going into Bitcoin. It's effectively the concept. Because again, there's kind of a system in place where you sell your alts and you buy Bitcoin, and then when Bitcoin comes up, you sell your Bitcoin and buy alts. It's almost a cycle. So anyways, that's just something to kind of think about, but just, again, factoring in here as well. Last thing, too, is also just kind of throw out there is that we do have a CME gap that needs to get filled here. Okay, so in other words, if you can see here, we have a gap there from right around 27.4 upwards of 28.7. So you could say once we hit 29,000, we could very well see a reversal. That could be a strong resistance level. But generally speaking, these gaps are typically filled within a couple of months, if not sooner. Now we're about a month in, so you do the math there. Is this trend going to continue to go higher? There is a possibility of that. Yeah, absolutely. I do feel that in that sense, to fill up that gap, we will and possibly should see Bitcoin inevitably hit that target. Okay. So again, that's just kind of where we're at there as a preface, foundation, so you kind of know what's going on. Again, when it comes to technical analysis, simply put, you're just extracting information from a lot of different time frames, a lot of different indicators, and perhaps a lot of different exchanges and or resources to kind of come to a relatively educated decision on which direction it's going to go. Okay, so that's what we're doing. We're just extracting information, kind of seeing what we can do to figure this out. Because it is kind of always a puzzle. You never truly know. There's no guarantees in trading, but you can absolutely increase your odds of success if you use best practice. And those are things I like to kind of teach. So as part of that best practice, something we just want to kind of acknowledge on the obvious side here is that we are well over 50 on the RSI. We haven't had that in 3 months. So ever since April 6th, I think it was, we haven't been over 50 on the RSI. So this is extremely important. We broke through that little resistance, you could say, on the relative strength index, which also implies that we are coming closer to a head here soon. In other words, we've broken through and shot almost straight up to 70 on the RSI. Granted, we're only at about 63, but generally speaking, if we close closer to 24,000, we will see, of course, that RSI may not have that much more room before it caps out. And what's interesting about this too is we are forming a 3 white soldiers type of pattern. So if you see here, we've got 3 strong green candles in a row. The likelihood of a 4th day being red is very high. Okay, so just again, No guarantees. Obviously, this is trading in a cryptocurrency environment, but I can tell you though that statistically speaking, three white soldiers will have a reversal in 7 or 8 out of 9 times out of 10. 7, 8, 9 out of 10. All right, so take that how you will. It's an extremely higher probability that you're going to see a correction. Once again, because of an overextension. Okay, keep this in mind too. This overextension is pushing us into uncharted territory, which we haven't seen in some time. In other words, we're up over the 50-day simple moving average here, and we haven't seen that since I think we peaked above back in April, but in all reality, as soon as we start our downtrend in April to late April, that's effectively when we lost the 50-day simple moving average and we stayed underneath this trend line. We've now broken through the trend line, but it's not a guarantee it's going to stay. So I just want to kind of reiterate that here. While it's all well and good, there's good momentum. Bitcoin very well should continue likely to increase and fill that gap at 28,000 as a rough estimate. We may see some type of reversal here soon. I'm not trying to speculate that we're gonna see 14,000 anytime soon, but I can tell you though that we're not in the clear just yet. Okay, so to me, confirmation. I know I spoke liberally about this yesterday. It is like waiting a full week for confirmation, right? Well, that's kind of a bit on the lofty side. That's also still very relevant. In other words, we haven't broken through that resistance level officially, even though we do have a new open candlestick here today, and the previous one closed right there at that level. So to me, that's not confirmation of a bullish market or just say a trend reversal until we have confirmation, which essentially in most cases, to me, is a duration of no less than 72 hours above and beyond that level. Okay, so if we can maintain the price point between 23 and 24,000 for the next 3 days, then sure, yeah, we should be in pretty good shape to see that continue higher. Granted, we don't have any double doji candles or some interesting patterns kind of showing us there's a strong resistance level, such as what we saw here recently back in July on the 9th. Okay, so again, handful of different things that kind of factoring in, but for the most part, this is positive. I want you to leave this conversation knowing that we're in pretty good shape, but once again, Bitcoin is a bit on the overextended side. So let's take a look at that overextension here. First of all, just to kind of note on TD sequential here for the daily, we're at a 6, which doesn't mean we're overextended by any stretch. We could literally see 3 more green days, maybe even 4 or 5, because Bitcoin does have a tendency of going a little bit on the extreme side. But as you can see in its past, anytime it hits a 9, it happens to reverse in most cases. And lately we've been hitting 6s and 7s. So with this hitting a 6 and potentially a 7 tomorrow, there's a great, or in my opinion, a strong likelihood that we're going to see the price action come back down to, at the very least, retest 23,000. Okay. Now, the reason why I say a retest 23,000 is just because that's, once again, right where the 50-day sub-moving average is averaging, as well as, of course, a previous resistance level, kind of an area there that has proven to have some resistance. Again, not a lot, it's not a guarantee, but that is absolutely something that you want to acknowledge because we retested 23,000 last night. In fact, we got filled on a short position, the price came right back up to 24. Okay, again, there's a lot of different things you can think about here, but generally speaking, that's where we're at on the daily. On the 4-hour though, this is the one thing that concerns me the most because this is a transitionary time frame. The 4-hour really tells you a lot about what's going to happen on the daily in the near future. Once again, 6 4-hour candles equals 1 daily candlestick. So in that sense, when we take a look at TD sequential here, we can see that we're at a 9. It's currently a bearish engulfing candlestick, which does imply we could see further downside. But more importantly, we're at a 9 here. Okay, so if you look here previously, we've had bearish engulfing candles that were inevitably reversed. Sure, that's all well and good. We're continuing this ascending trend above the 20-day sub-moving average. But if you were to kind of look at the current situation here, you can see that we're at a 9 and that we were previously only at a 4 or 5. Okay, so again, when you hit a 9 on TD sequential on the 4-hour, that carries more weight than on the hourly, for example. And it tells us that we've had 36 hours of straight continuation to the upside. Okay, so it literally hasn't stopped for a day and a half. So that thought process there, thinking about that openly, where we're at right now, we're on the overextended side. I'm willing to guess also we're over at, or we're close to 70 on the RSI, which obviously we got rejected off of 70 here when the price action hit 24,300. So the inevitability of the price action coming down is greater. What we could very well see is the price action come down to 50 on the RSI, which would put us close to the 23/22.5 range, and effectively, continue to make higher lows. That'd be fantastic. We want to see that. We want to have that. But for the most part, 3 white soldiers overextension on the 4-hour, likely an overextension on the hourly. We're absolutely kind of hitting that critical mass. We shouldn't go much further from here. Again, could it happen? Absolutely. Cryptocurrency is really strange and crazy and chaotic in that way. But once again, traditional rules of trading tell us that we need to turn around soon. Another thing as well is we're outside the standard deviation here. Now, while this isn't an actual standard deviation, it's the truth is we've broken above this ascending trend line. And when you break above an ascending trend line, the upper trend line, then it has a tendency of collapsing and or coming back down on itself. Okay, so it's very similar to looking at the 15 minutes and then pulling up the volume weighted average price. We can see here clear as day that the price is well outside that standard deviation, and then the price has to come back down. And right now here at this point, we've lost VWAP, so in a lot of ways, we're probably going to see a continuation of the downside. Okay, so again, you're in pretty good shape there in that sense right now if you are essentially riding a short position from 24 to 23,000. I think that's fairly safe at this point just based on the extreme overextension we're seeing on a lot of different time frames. Let's look at the hourly and kind of see if there's anything here that really kind of gives us any indication of how overextended we are. I think we saw a couple of 9s previously, if I'm not mistaken. I apologize for all the lines here too. I know it's kind of a mess. It looks like something from a movie, but bear with me here. Let's see here. We're going to go ahead and do, why don't we just go ahead and go to this guy here so we can clear it out for you. And then take a look at TD sequential. All right, so we hit a 9 here previously. All right, 9, reset, went sideways and down. Came up to another 9, got a reset, and then back up to another 9. As you can see, Bitcoin's hitting 9s pretty consistently on the hourly. And then, of course, the price action comes sideways, comes up here, gets stalled out by a handful of factors, the overextension on the other time frames we were looking at, and now it's progressing downwards. So while this didn't hit a 9, we have to acknowledge the fact that we've hit 3 9s in a row ever since the 16th of July. Okay, so in 4 trading days, we've overextended ourselves 3 times. That to me, plus an overextension on the 4-hour, really just leads to one thing: price action likely correcting itself in the near future. Again, there's definitely no guarantees in this market, but I can tell you that those are all things that really definitely, in most cases, kind of have a tendency of, fulfilling themselves. So for lack of better terms at this point, what we want to do is probably, let's extend this trend line out here a little further. Have that as a potentiality. In other words, the price action could come down to 23,000, lose that, and come all the way down, literally to this point here. And the great thing about that is we'd still be making higher lows if that were to happen. Okay, so the price does correct itself down to say the 22,000 range. There'd be no problem with that because we'd still be honoring that ascending trend that effectively should get us upwards to the 28, 29,000 range. But for right now, a pullback would make sense. Okay, that's just kind of what I'm trying to drive home here. So I'm not saying you want to short your shorts off, but you do want to, proceed with caution, use small position sizes. And to touch on that too, one of my community members was asking why we still have some trades open from a month or two ago. And the truth is, we have a lot of situations in the bearish market where you can get stopped out with a lot of nonsensical, spikes. Okay. So if you use a trailing stop loss, a moving target trailing stop loss, you're going to be a lot safer. But more importantly, as long as your position size is effectively smaller than usual, you can survive through that and hold on to it and make sure you get filled eventually. So what I'm proposing here is that you use smaller position sizes in a bear market because it's absolutely more efficient. And oftentimes too, it'll keep you in the game longer. It's more of a survival thing than it is a thrival thing, if that makes any sense. I don't even think thrival is a word, but if you're trying to thrive in this market, in a bearish market, it can be challenging, right? Not everyone can do it. I prefer to be on the safe side since a lot of my community members do follow my signals. So again, that's just kind of where we're at there for the moment. We haven't confirmed bullish sentiment yet, but we're getting close. There's no doubt that breaking above this 50-day simple moving average is a very positive sign. It's a great step in the right direction. But the truth is we're overextended on a shorter amount of time or the shorter time frame, and I wouldn't be surprised if we see a pullback tomorrow. What I'm looking for is not a doji candle here today. If we do see a doji candle, that might signal us to see the price action coming back down. What we want to see is just some sideways action, preferably closer to 24,000, consolidate at that resistance and then break through. Because 24,000 is a previous resistance level that goes back a ways. Just to touch on this here, 24,000 was back in December of 2020 before it went parabolic, or as it started to go parabolic. So that was kind of a strong resistance level there, where we had this ascending type of triangle that broke out to the upside. It was actually a very, very great day for trading, or week rather. But regardless, 24,000 was the point in which the price was unwilling to break. And for right now, it does look like 24,000 is willing to hold. All right, so take that how you will. That being said, thank you so much for joining me here. We'll go ahead and take another look here tomorrow and kind of see where we're at. But I appreciate, obviously, all the support. And if you want to become a community member, I've got a lot of folks coming over from my trading academy and the signals. CryptoCache.tech is a site. Link in the description below. I do offer discounts for military and third world countries alike. Hope you have a great rest of your day. Thank you so much for your time. We'll see you in the next one.